What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Meta, ticker symbol META, on a variety of time frames in anticipation of tomorrow's trading day, Monday, February 5th. Well, Meta on Friday, holding on to its ridiculous after-hours Thursday move, actually finishing the day higher than the open, which is not incredibly common on a move like we saw out of Meta there on Thursday night. But granted, I think well-deserved given the blowout nature of the earnings. Of course, covered it on the Roensch Capital show there on Thursday. But let's take a look at the chart here. We'll, of course, start with the 1-minute chart and give as much context as we can as we go forward. With each additional chart, typically, we end up getting more and more context and more meaningful context as we go. So naturally, we'll start here at the 1 minute. You can see here that this big opening drive is what a lot of traders would call that. You know, that offered to a lot of intraday trend traders likely a decent position here off the bottom, or at least once we got back above volume weighted average price after fading down below in the pre-market and then maintaining good volume here as the stock continued to push higher. By the way, if you guys want to get scalp setup alerts, swing trade setup alerts, unusual options activity, all human verified by me, by the way, personally, and platinum one-on-one, you can become a platinum member. That link is in the pinned comment. Hope to see you join. Now, next up, I really like to look at the volume using the 5-minute chart, because this gives us a lot of good context as far as volume is concerned. Now, why are we looking at volume to begin with? Well, listen, as always, when a stock is moving in our favor, so in this case, clearly the bulls, right? You want to see volume as high as possible when it's moving in a direction that confirms your bias. In this case, if you are a bull, that would be up, right? When it's doing so, you want that volume as high as possible. And when it's pulling back, you want that volume to fade. The opposite is true if you are a bear positioned short. Now, why is that the case, right? You want as big of a sample size of market participants agreeing with you and confirming that the stock belongs higher if you're a bull as possible. And then again, in the bullish case, if the stock is pulling back and the market is saying this thing belongs a little bit lower, you want that decision being made by as few market participants as possible, with the anticipation that when a larger sample size dumps back in, the volume goes up, right? That bigger sample size will return to the thought process that it belongs higher. Again, the opposite is true if you are bearish. So in this case, I think the best data we can pull here is really off this opening drive here. Now, it's very common, of course, to see that opening candle have very, very high volume. But if we kind of throw that out of the mix, of course, it's a red candle, but really, that was essentially a flat candle when it was all said and done with big, long wicks, right? Now, that opening drive, it maintained volume deep into the day on the 5-minute chart, where usually this will fade relatively quickly off the open, start forming that U a little earlier, right? It actually maintained relatively nice volume as the opening drive pushed higher and higher, which as a bull, I mean, that is a positive thing to see. Okay, again, big sample size saying, listen, after last night, Meta belongs higher. So let's now move on here to the 30-minute chart and take a look at our first self-fulfilling prophecy indicators now. That gray line is the 200 period. That white line is the 50 period. Naturally, that 200 period is going to take longer to make any move to catch up to the stock than the 50 period. It's a longer time frame indicator, right? That's very natural. Also naturally, when comparing the 30-minute, the 4-hour, and the daily, the 30-minute is going to have the quickest reaction time, specifically the 50 period, okay? So you see this getting ripped up to the upside. Now, listen, guys, it wouldn't surprise me. This is really common to see a move like this and the 50-day is kind of meandering its way up. This thing is getting absolutely ripped upside. Now listen, as a bull, that's a good thing, because you want as many psychological barriers or quote unquote safety nets as possible, where if the stock starts to pull back, you have something to look at and say, okay, there are going to be some decisions made around this level that can act as a potential safety net. Of course, nothing is bulletproof. So listen, that's a good thing. Now looking toward tomorrow, Monday, if you're a bull, if we end up seeing a back test of this 50 period here on the 30-minute, first of all, I like that it's above 450, because 450 is a psychological level, kind of where that run in the after hours on Thursday ran out of steam, kind of right around that region. If we see a back test of that 50 period, I want to see that hold as a support level. The same way, if you're a bear, you're going to want to see that thing break. Ideally, 450 break to the downside, because that would be discouraging to a lot of bulls and encouraging to a lot of bears. All right, let's move on here to the 4 hour. As promised, look here. The 50 period and the 200 period, they're going to meander. They're going to take their time. It's a longer time frame chart. Listen, immediately relevant on the 4 hour. On the 4 hour, not a lot except for the psychological price indicators, which we're better off going to the daily for that. So looking here at the daily, you can see it looks pretty crazy, right? That 50 day, that 200 day, those aren't going to be here to save us. They're down around 357. Okay, the 200's even worse, just above 300 bucks a share. Meta has been on an insane tear. I mean, look at this. Absolutely crazy for the last, what is that, 14 months? Something like that, on a ridiculous move. So, what's here? Well, we're currently kind of halfway in between 450, which I would expect would be a psychological level, and even more, 500 bucks a share. That is a huge level. So listen, bulls, bears, there is one thing, well, really two, on both of your minds. If you're a bull, you want 450 to hold if we make a test, and you want 500 to break upside if we make a test. Of course, this doesn't necessarily have to happen tomorrow, but in the near future, that's what's on your mind. Okay, if you're a bear, 500 hold as resistance if we test it. You are hoping that psychological barrier, it really acts as barrier, and 450 downside, you're hoping for that to break as hard as possible downside. Okay, now, I want to go back to the 4 hour, and we'll come back to the daily in a second, but I just want to show you something, because this will help us show it a little bit better. These self-fulfilling prophecy indicators, again, the longer you go, the daily, the 4 hour, they take their time to get up, and that's natural because it's a longer time frame chart. But listen, I think a lot of people don't think of things this way. When you see a massive move like we just saw on Meta, going sideways, listen, I don't mean literally, of course, but going sideways is just about as satisfying to me as continuing higher. Why? Because to hold a move of that size, I mean, look here, back from, what is that, Wednesday? 21.5%, are you kidding me? To hold that move and consolidate, especially on big volume, it is such a sign of strength, and not only that, it gives these self-fulfilling prophecy indicators time to come and be forced upside and close that gap, because I'll tell you what, the bears are looking at this gap on the 4 hour and a variety of other charts and saying 15% to the nearest safety net, and they're salivating. Okay? To really crush the spirit of the bears, what do the bulls want? This thing either moving higher, but listen, even some people would argue a little bit better, holding that move on big volume and just saying, yep, this is where we belong now. Closing that gap, crushing the bear's spirit along the way. And bears, you want to do the same to the downside. Okay, let me just show you something really quick before we take a look at the actual options traders, what they're thinking. Implied volatility, fading off hard since earnings. The lower that goes, the better for newer options buyers, whether they're buying calls or puts, because it opens up opportunity to experience maybe some IV pump. Like if this were down here, then you may experience some IV pump if you see IV bounce back toward equilibrium. The higher that goes, right, that's better for options sellers, but it does open up risk for options buyers who own options, opens up some IV crush risk. Okay, so this is currently in about the middle of the range, about equilibrium. So just understand that when managing your risk and assessing your position or future position if you're looking to get in on something, okay? Let's now take a look at what are the options traders saying here from Friday about this coming week. 2.38 million total contracts traded. That's a big sample size. That's really great data. Okay, 1.44 million of those were calls, 940,000 of those puts. Overall call put ratio leaning heavily to the bullish side, but we're not done. That 0 to 20 delta, those are the short-term speculators. Okay, again, specifically short-term speculators. What are they saying? 442,000 calls, 539,000 puts. Of course, I'm rounding down on each of those to the nearest 1,000. Those short-term speculators, they don't believe when you take, the entire sample size, it's leaning a little bit to the bearish side. Not quite as much as the overall is leaning to the bullish side, but still, the short-term leaning slightly to the bearish side. They're saying, hey, we don't believe in this pump, at least in the short term, okay? But then you go back to the midterm and the long term, that 61 to 100 delta range. Those are deeper in the money, typically a little bit longer dated, if not leaps. Leaning heavily. I mean, look at those numbers. 152,000 calls in the 61 to 80 delta range, 237,000 calls in the 81 to 100 delta range, and collectively 61 all the way to 100, we're seeing less than 40,000 puts. Listen, overall call per ratio, leaning bullish, short-term speculators leaning slightly bearish, and mid to long-term leaning heavily bullish. Listen guys, before you head out, please subscribe to the channel, helps out tremendously. Also, let me know in the comment section what stocks, even if it is just Meta, would you like to see me cover here on our brand new channel in the near future? That feedback helps out tremendously, and I'll see you in the next one.